We will be proceeding on to the next discussion, that is, investing for purpose and profit, the principles for responsible investment. Discussing this in detail, we have Dondi Hananto, Patamar Capital Partner, Fernanda Lima, Partner at LeapFrog Investments, Boon Thio, Chief Executive Officer, UOB Asset Management, and Moderator, Jinesh Patel, Partner at Integra Partners. Let's pass the time over to Jinesh, please.
Thanks, everyone, and welcome this afternoon to this panel on profit with purpose. My name is Jinesh, as the host just originally mentioned. I am the partner of Integra Partners here in Singapore. We're an early stage fund focused on financial services and healthcare, and it gives me great pleasure to kind of host this panel. But before we start, it would be good to introduce each of the panelists individually and get them to share a little bit about their history on what is probably the most topical strategy within investment management globally today, which is ESG and impact. At the outset also, I'd like to apologize. One of our panelists, Fernanda, unfortunately cannot join us due to technical issues. So I've now left with Dondi and Boon Kiat to spend most of the time sparring with each other on this call. So I'll first pass over to Boon Kiat. Maybe you can start with giving a little bit of background on yourself, and then we can pass to Dondi before we kick in.
Sure. Jinesh, thanks again. It's my great pleasure, everybody, and good afternoon to you to be part of this panel. And by way of introduction, again, my name is Boon Kiat, and I'm the CEO of UOB Asset Management. A little bit about UOBM. We were formed in 1986, so we have been in Asia for more than 30 years now. And we now have a regional network spanning 8 countries in Asia. We focus primarily on the public markets. That includes equities, fixed income, and alternatives. And our participation today at SFF aligns with our vision to be a leading regional asset manager in digital and sustainability. And it was a transformation journey that we began some 2 years back. And in sustainability, the topic of today's session, we gained membership to the UNPRI in 2019. And beyond developing our internal capabilities, we have partnered regional and global leaders in this area, such as Robeco in Europe and Fukoku Capital in Japan, to accelerate our development and contribution to this area. I might also add, and Jinesh could probably come in a little bit later, that UOBM is actually a wholly owned subsidiary of UOB Bank. So we offer that additional dimension beyond just being an allocator of capital to being in probably a good position to collaborate with the issuers of capital, if you would, to advance sustainable investing. So that's my intro, Jinesh.
Thanks, Boon Kiat. Dondi?
Hi everyone, thanks Jinesh. Good to be in the panel. I can't believe that last year SSF was my last time in Singapore. I'm sitting in Jakarta now. So I'm a partner with Patamar Capital. We're venture capital focusing on impact businesses. We invest in South and Southeast Asia, mainly India, Indonesia, Vietnam, and Philippines. We have a lot of interest in financial inclusion and financial services, and I think that's why we're here. Our focus is really on early stage, so quite a big gap from Boon Kiat there, working with more public market. We're investing very early, mostly Series A, sometimes pre-A, sometimes post. That's where we are.
Thanks, guys. And maybe we can start with what I think is probably the most topical issue, which is, the huge tailwind supporting ESG and impact investing, but equally what I would also define as some of the hype that surrounds this. And the realities are that what we've seen globally is a momentum shift in asset allocation towards ESG and impact. But the unknowns, in my opinion, are the ability to evaluate what that actually means and how each organization is targeting this. So maybe because we've got the nice cross-section of public versus private, can you give us a sense of where we sit in the hype versus reality value chain of impact and ESG, Boon Kiat? And kind of what you see how you see that in the context of the public space.
Sure. Jinesh, thanks. I think maybe if it would be good that I share my experiences and observations since UOBM has embarked on our sustainability journey. And in particular, I'll probably relate it much more to Asia. And Maybe I'll have to add on to the hype. In fact, if I were to lead off my part today, it would have that title, "The Time Is Now." I personally feel that sustainability is on the cusp of a mega trend in Asia. And in many respects, I feel that 2020 has been that catalyst and point of inflection. And maybe just for my part, I want to touch on three main points relating to public investments. And I hope that we might have some time later to dive into some of these in greater detail. The first is that we have seen, especially in 2020, the convergence of what I feel are three significant enablers. The first enabler is that more Asian countries, in particular governments and regulators, are really getting into the act. Japan and South Korea have been your traditional trendsetters, if you would, for sustainability in Asia. But much more recently, we have seen notably China stepping up their focus and efforts in this area, announcing that they aim, for example, to have CO2 emissions peak before 2030, to achieve carbon neutrality before 2060. And closer to home here in Singapore, where some of us are here, we have actually formed and named a ministry called the Ministry of Sustainability and the Environment. I think that's a significant statement of intent. And we should not underestimate, as allocators of capital, these top-down effects, as these public authorities have the power to provide both incentives and disincentives in the forms of fines, sanctions, regulations, etc., to propel the sustainability movement. The second enabler I'm noticing here in Asia is that the asset owners are actually taking a much more serious view towards incorporating sustainability into their investment expectations of their fund managers. And what I'm seeing is not just the traditional sovereign wealth funds, but also public institutions, societies, family offices demanding such capabilities of their managers. And more recently in this pandemic, companies have also had a greater urgency to focus on issues such as labor conditions and, I suppose more broadly, human capital management. And these companies have started to echo the growing voice of millennials, and I hate saying these older individuals like you and me, who have awoken to the need to take a much more longer term, more responsible and enlightened view of the society that we and our future generations will live in. So I feel that the convergence of these three enablers simply means that there's now a business imperative for fund managers to embrace sustainability and responsible investing in our capacities as fiduciaries of clients' needs and monies. Put in another way, it now becomes a business risk not to embrace sustainable investing. The second observation that I've made, and it relates much more to public investment management and probably touches on some of the points you make initially in terms of limitations, and these are my next 2 points. I'm seeing a growing trend, including at UOBAM, for sustainability to move from a more exclusion kind of approach, if you would, that's a more traditional way, to a more holistic integration into our investment processes, and even more recently, in some cases, also to incorporate non-financial impacts such as climate risk and human capital impacts into the measurements of our performance. The other trend I see emerging is the move from viewing responsible investing as simply a risk mitigation strategy to taking on a more active approach to add value or alpha to our portfolios. So I feel that in essence, ESG is increasingly seen to be additive and complementary and not in conflict with investment concepts. Indeed, for example, at UOBM, I see it more as an expression of our focus on quality in our investment philosophy, but in a much more structured and systematic way. The other point I'll make that as it relates to sustainable investing is the increasing role of technology in enabling sustainable investing trends. The advancement of digitalization can help data systems become more robust and capture more and more necessary information for investors and investment managers to better analyze and visualize how their sustainable investing goals are being met. I feel, and this is probably the topic of SFF, fintechs can actually play a big role in this development by working with both asset owners and fund managers, such as UOB Asset Management. And indeed, where I sit at UOBM, we're already exploring some such partnerships. My final point relates to what you mentioned. It is really an ambition that is not all hunky-dory in sustainable investing. I feel at the end of the day, significant challenges and limitations remain, especially in Asia, not least in the area of infrastructure, where there is still, I feel, a lack of proper data, clean data, proper benchmarking, and as you mentioned, also accurate measurements. So we need to develop that. The other area I feel which is still a limitation is actually sad to say in mindsets. my experience so far is that a not insignificant number of investment professionals remain quite skeptical and see ESG and responsible investing conflicting with the delivery of investment performance. I would personally move away from this narrow-mindedness and see it more from a half-full perspective and work towards resolving what I feel are very natural short-term obstacles in the development of a relatively nascent trend. So I'll probably want to conclude with a closing phrase, just like I begin with. And that phrase is from values to value. In essence, what I'm seeing is a convergence between our human values to financial value that investment professionals pride themselves to be experts on. And I feel at the end of the day and in the long term, we must realize that what ultimately happens in the capital markets will simply be a reflection of what happens in the real world. So I think sustainable investing is here to stay. But I will also acknowledge your point that there's still significant challenges ahead, especially in the area of clean data, proper measurement. But I think, to me, it's taking on a much more collaborative and positive mindset towards resolving such issues. So that's my spiel, Jinesh.
Thanks, Kiat. And maybe, Dondi, can we move on to the kind of the tech aspects and kind of shift from public to private from a top-down perspective? And Dondi, just for your information, you're on mute, so you may want to unmute yourself when you start.
Thanks for the reminder. Yeah, I think from our side, on the early stage investments, we are actually seeing a natural progression where the interests converge. So just for example, the kinds of companies that we're looking at right now, back 8 years ago when we first started investing, we were probably the only ones who are looking at these kinds of companies. Whereas now we are seeing a lot more interest from traditional tech VCs. So I think there's a natural progression where the worlds collide. I think just to give a background that we're looking at it really from the bottom up. Our focus is more on the stakeholders, where we are investing in any companies that touches the mass market and the low income population. So obviously, if you're looking at it from a business point of view, it's a huge market in our regions, right? So India and Indonesia, where the unbanked is still more than 50%, for example, there's a huge opportunity to be able to reach them and deliver financial services. So I think that's the interesting part, where we are seeing a convergence of interest from impact focused VCs and just traditional tech VCs. But I think there's where we are seeing the difference of how we want to measure the impact. Where people like us, because we do have the impact mandate, there's a kind of intentional impact, what we call, where we have to work with our portfolio companies to have some kind of impact measurement and metrics and actually report that, right? Whereas for some other investors, maybe it's a nice to have, it's a nice story to put in your annual report. You got some nice photos of working with villagers and all that. That's always nice, right? But I think the intentionality is where we're different. Now, on your question on the skepticism, right? I do have that question as well, because obviously, like I said, it's a sexy it's a sexy topic to talk about. Everyone wants to be seen as doing good, right? So we are seeing a lot more chatter, definitely, in the last 5 years or so, since we're becoming a lot more active. But really, I think the big challenge for us as a fund manager is whether the LPs, the money managers, are they really just talking about it, or are they voting with their money? And that's where I think the difficulties are, because we are seeing some, we have a whole bunch of different types of LPs in our fund, right? So we've got pure family foundations and some corporate foundations who obviously are very focused on the impact side. We've got some pension funds who, obviously they're interested more on the return side. So we're there trying to be in the middle. So yeah, and that's where we're really as time move along, we are curious to see how more LPs are allocating their funds, and they're actually investing in funds like us that are intentionally impactful, or do they just want some nice stories to have for their patrons? So I think that's something to really see. I think there's still a progression right now. People are trying to digest what impact means to them and how they wanna allocate. This is still, unfortunately, after 8 years, it still feels like early days. So we are going to see more changes.
Yeah, I mean, one of the things that I think 2020 has really catalyzed, given what's been going on in the world, has been that there's a clear awareness that environment is obviously a category that people need to focus on, and governance is something we as asset allocators and investors obviously always consider whether we make investments in companies due to any mandate. But the thing that I think has been the biggest shift has been the focus around the S, the social. And I say that because Fernanda unfortunately hasn't joined us or not been able to join us, but one of the key elements of their strategy, which I really support, and we have a similar view, is that the intersection of financial services and healthcare was brought to the forefront in the back of what's been happening this year, right, in 2020 with COVID. And access, affordability, not just around healthcare, but education and basic services and goods within the kind of broader ecosystem has been driven through social change. And these changes have been much slower and have had a much greater lag effect than you would have typically seen due to the poor infrastructure that tends to exist in emerging markets. And even the developed markets, they've lagged, right? So we've seen the same problems with some of the funding schemes and some of the kind of grant schemes globally. So when you think about, the hidden part of the ESG, the S piece, how are you guys positioning for this? Because a lot gets focused on E, a lot gets focused on G, a lot doesn't really get focused on S. So how are you thinking about this in that context? And maybe Boon, I know you have a very strong view on this.
Yeah, I think we spoke pre this session, and I told you it's that sandwich class between E and G, which is less sexy. And I saw my own feeling why it is less visible, if you would. Jinesh, is because of what you actually mentioned, that there is still a lack of proper measurement where S is concerned, for even including investment managers such as us. There are certain things you can measure on the S part, whether it's poverty indices and everything. But when you talk about what has happened in pandemic, where the S has actually come more to the fore in terms of human rights, in terms of gender equality, in terms of working conditions, those are much more difficult to measure, and therefore I think they are much more conveniently ignored. But what I do notice is that, again, you remember I started off by saying these three key enablers: the governments and the regulators, and then you got asset owners. And I'll tell you this: over the next couple of weeks, we are actually presenting to some bigger institutions, and they have actually required that we are able to articulate some of the impacts related to the S part of things also. So I think you're right. It's this, well, if there was ever a good thing that happens out of pandemic, is this realization that don't forget the S, and taking more a step back as an investment analyst. At the end of the day, people matter in businesses. So if you take good care of the workforce and you score high, so to speak, on the S part, you probably have a good company also. So it's something I strongly believe in, and again, it comes back to your initial point, how to measure it. That's where it's going to be quite tough.
Yeah, and maybe on that social impact component, one of the biggest fears of this entire pandemic has been not just inequality, but also availability and accessibility to jobs, basic income, basic work. So Dondi, I mean, how are you guys thinking about this? Because one of the measurements that we get asked a lot about and it's an agenda even at a government level here in Singapore around employment and jobs. How are you thinking about that in the context of the businesses that you're supporting or looking to invest in, and what is the kind of vision that you have when you interact with these founders, with these startups?
Yeah, I mean, I will have to say I really echo Boon Kiat's sentiment about measurement and metrics, right? Because it's very difficult to find a single metric that's understandable and that encompasses all different businesses. Plus that fact that in a lot of the emerging markets like Indonesia, India, Vietnam, the economy is there's a huge chunk of the economy that's really informal, right? Where even our own governments are using estimates to measure their GDP contribution. So it is it is definitely very hard to measure. What we usually do is that, again, because we focus on these mass market, the informal micro businesses and all this, I think one of the easiest metric and that we very often use is really to take a baseline average income of what someone with the stakeholder looks like, and then see how that progresses with the companies that we work with. So, for example, if a company works, one of our companies work with in the pharmaceutical distribution, working with small mom and pop pharmacies. We know that the turnovers of these pharmacies are usually on average only about 10,000 Singapore US per month. So we can have some proxies of as they purchase more from our company, we figure out whether there's an income increase. I think those are definitely very, very challenging. I do agree to find the right metrics and to find the easy metric to measure as well, because we don't want to, with very early stage companies, we don't want to spend so much effort and energy just to measure this, right? So we want to make sure that it fits into the financial metrics as well. But what we are seeing definitely is that that question on equality and access to proper services, healthcare, education, everything. I think that's definitely something that has really come to the forefront during this pandemic, and I think it's really imperative that we find ways to help these people get more formalized and allay their fears of becoming more formalized, right? So I think that's still going to be a big challenge, and even living here in Jakarta, I do see that from their point of view now, the good thing about the pandemic is it really opens up their eyes that technology can actually help them. So all the skepticism about technology in the past, because they were forced to utilize these tools during the pandemic, it really brings a whole lot of new users, and yeah, I think it will speed up a lot of changes.
And can I ask, in the interest of time, because we've only got 5 minutes, where do you think the biggest gaps lie between where we would like the world to be in our view from an impact and ESG perspective, or in your respective views, to where we are today? Is it a regulatory issue? Is it a lack of capital issue? Is it an awareness issue? Can you what would be your one kind of biggest concern or area of concern when it comes to a gap between where we would like to be and where we are today?
Right. Yeah. So if I can say, I think the biggest gap really is, with us, I do feel the big challenge is to articulate the actual situation on the ground to investors who probably have never set foot in Southeast Asia except Singapore, right? So we've got quite a lot of LPs and potential LPs who haven't been to Southeast Asia outside Singapore, and I told them, you fly an hour north to Hanoi or an hour south to Jakarta, and you'll see a very different world, right? So really articulating those challenges that are here on the ground and getting all those nuances, I think definitely helps, because that's what we see the experience of some of these investors in the past. So yeah, I really feel that's our personal challenge, right?
So for you, it would be awareness.
Sorry?
For you, it would be awareness is the biggest gap that you feel. And Boon, Kiat, in your case?
It sort of leads us back where we started, Jinesh. That I think in the public investment sphere, it is more about a lack of proper data, still clean data. And I would add it to the conversation that we spoke about on the social. It's also about benchmarking. See, the problem I still find, especially where S is concerned, where there's no proper benchmark. For example, how do you measure engagement in the company, for example, right? I could come with all sorts of measure for you, and I think how do you benchmark one company against the other? So I feel if you were to ask me one thing that I find lacking where responsible investing in Asia is concerned, it is really a lack of proper data and lack of proper benchmarking. So that's my view. Awareness, I feel we'll get there, and we'll get there quite soon. I really feel strongly about that. I was talking to you about the enablers that I'm seeing, whether it be the regulators, the governments, the asset owners are telling us what to do. So it becomes beholden on us to deliver that. At the end of the day, financial performance is obviously very important, but we are also sensing that our investors also are defining performance in slightly different way also as we move forward.
Yeah. Understood. We've literally have 2 minutes, so I'm going to give you a minute each, maybe to kind of define how people should learn more from you and kind of how you guys are allocating your capital and your time. What's the best way to contact you? How do they get in touch, learn more? Because I think this is also very important in the context of driving greater adoption across different asset classes and across different pools of capital. So can we just, and this can be self-promotion to the highest order, but with some caps, please give everyone in the audience a bit of a sense of how to get in touch and how to work with you.
You can start first, Dondi.
No, I mean, we're always happy to chat more about experiences and trade notes. I don't think we're experts here. We're still trying to figure things out as we go along, and so always happy to trade notes and see where people's interests are. Do contact us. The easiest way is to contact us through our email at info@patamar.com. So that should be pretty simple. Thanks.
Very subtle self-promotion. Well done, Dondi. Boon Kiat.
I've got to find out what's the website address for UOB Asset Management, which I don't know. But I think on a more serious note, Jinesh, my feeling is that where UOB Asset Management would want to come in, and I'll be the first to admit that we are also starting our own journey, is to learn along with our investors and also to educate the investors. And to the extent what we have been doing has been to organize webinars. We have been organizing thought pieces, and these are all accessible through our social channels or even from our website. And the other point I might make is that we are also looking for partners. I sort of mentioned to you just now about this thing about measuring impact and everything. And the experience I've had at SFF, for example, has been there are quite a few fintechs that actually have developing systems actually to help us to more properly measure the impacts and helping us to visualize some of these things more. In fact, just as we spoke earlier this morning, I already set up some appointments with some of these fintechs to help to partner with us to try to see how we can sort of advance the whole sustainability investing journey for Asia as a whole.
Fantastic. Look, we have sadly run out of time. 30 minutes goes very fast on this topic. Thank you both very much for your time. Really appreciate it. And I'll pass it back over to the rest of the hosts.